Wednesday, the 28th of October. I am Boston Omofaye, and this is Frontier Opening Bell. Let's get the show started. Alekan Sacho in Nairobi, the CEO and founder of Rich Frontiers Management. Good morning, Oreolua Odetunde. It's also good to have you on the show this morning from Greenwich Merchant Bank, the head of macroeconomic analysis and the head of equity analysis at Vertiva Capital Management, Luke Ofojebe. Thank you so much, three of you. We appreciate your time. Let's go straight to the markets and the fears and all of that over the elections on Saturday by the in Ivory Coast is biting into the market a bit. A sell-off yesterday, but the market still went to 1.31%. The banks were the main gainers yesterday. Everyone is looking at the election this weekend. Fears, as we hear, is gripping Ivory Coast commercial capital, Abidjan. Folks were stocking up on food, on fuel and other energy sources. No one is sure what will happen as President Alassane Ouattara recontests for another term in office. Nigeria's 0.7% yesterday. The earnings news is here. The insurance sector made a big jump, 2.70%. Those folks are the epicenter of Nigeria's unrest, looting, destruction, and all of that. Protests in Lagos and elsewhere in the country. Egyptian market about 0.5% in the green. Kenya 0.14% and South Africa 1.48%. Iran also fell on Tuesday. All eyes on Tito Mbowene's midterm budget speech this afternoon about 1 o'clock Nigerian time. Let's look at the East African markets and checking in with Kenya first, where Kakuzi is looking to settle those cases of rights abuses out of court. Well, those rights abuses cases ricocheting all the way into the UK. Cooperative Bank says it needs about 12.5 billion shillings to revive Jamii Bora. What exactly is the bank looking for? Shanta Gold is pumping 17.5 billion shillings pre-production capex into its operations in Western Kenya. Tanzania and Total Oil have signed off for an oil pipeline construction. Uganda's public debt surges, and Ethiopia is giving Washington cold shoulder over President Trump's intervention in the Nile Dam dispute between Sudan, Egypt, and Ethiopia. Ali, hit the ground running for us. Do you think this is Kakuzi coming to the table this time around, humbled and ready to deal with these human rights abuses once and for all?
So, this story blew up because the Sunday Times put together a very big spread, I think about 10 days ago, and a very in-depth number of incidences. And Kakuzi was half asleep at the wheel. They dealt with it in a very inappropriate manner. To begin with, it made it out that it was competition that was seeking to pressurize them because of the quality of their avocados. It was really, frankly, dyslexic and nonsensical was their response. And I think they've moved from that point to understanding they've got a substantive issue that they need to deal with. It's now popped way, way over the radar, as you said. And it looks as if they're coming to the table, recognizing that there have been abuses and looking to settle probably compensation on that front. Kakuzi is a diversified plantation company. It was originally a tea company, pivoted to avocados very successfully, macadamia nuts, and is one of the outperformers at the Nairobi Securities Exchange over the last year, 3 years and 5 years. Amal Clooney was leading the effort to get compensation from Kakuzi, and clearly, they've had to up their game, so they're resolving that. Coop Bank, this is the tier 1 bank here in Kenya. They bought out Jamii Bora. Jamii Bora's balance sheet suffered enormous credit losses. And basically that estimate of $125 million is what people think will take to resuscitate and reinvigorate the Jamii Bora brand. Jamii Bora was one of the tier 3 banks. Most of the tier 3 banks have been unable to cope with the situation, and the central bank has been encouraging the buyout of these banks. Jamii Bora was one of them. Fidelity was another. That was bought out by SBM, and there've been a sequence of these transactions. Shanta Gold pumped 17.5 billion. This is really all about the gold story. You've had this uplift in gold to $1,900. It's made a lot of African gold concessions very viable. Shanta Gold is looking to pump some money into this, which is in Western Kenya. Tanzania Total Oil signed deal for oil pipeline. This is the pipeline that's going to run from the Lake Albert Basin, where Total have discovered all this oil, all the way to Tanga in Tanzania, which will probably transform Tanga, which was an old sleepy port, into an oil and gas hub in Tanzania. And it shows you that there's speed with which Tanzanians and Ugandans are now moving, which is a positive sign given the price environment we're currently in terms of the oil market. And finally, Ethiopia snubbing US threats. This is President Trump, who made some very crazy, frankly, and indiscreet comments. He was looking to be the interlocutor, but basically sided very strongly with his friend, his favorite dictator friend, al-Sisi, and said that he could understand if the Egyptians would bomb the dam. I mean, you know, it's really quite crazy stuff. I think the Ethiopians handled it very well, actually, and diplomatically, unlike Trump. You know, they didn't do an Erdogan and start abusing each other, but they also divested Trump of his interlocutor status and gave it to the African Union, which I also think was a clever sidestep by the Ethiopians. But hopefully that will now calm down.
Yes, those three countries are neighbors, by the way. They share a whole lot of cultural, historical, economic, and social affinities. So, and that project really, to my mind, really needs to go on. It's a major one. They just need to find a way around it, and everyone take a little bit of what you call the SWOT analysis, what are the strengths, weaknesses, and opportunities, and just share the risks and all of that, and try to make the best of it for the Horn of Africa's corridor when it comes to what the electricity and all of that will be generated from that $4 billion project. Nigeria has a whole lot of stories coming through as we have across a few other frontier African economies when it comes to third quarter numbers. Flour mills of Nigeria, revenue up 31.2%. NASCON allied in industrial goods, 7.3 billion naira in revenue. Finance cost for this company was sharply down in the third quarter to 43.4 million from about 122 million naira previous. That looks good on the books. But again, we don't want to forget the story around the UNCTAD, the latest FDI report released yesterday by the UN agency that global FDI was down about 50% in the first half of the year, and developed economies were the most hit. Ghana's elevated borrowing is pulling the bonds higher. That's still part of the news, as we see a lot of other reporting companies within the Ivorian market. Coop Bank says its profit went up 20.4% in the third quarter. Let me ask Aroluwa to start on the macroeconomic side. When we talk about FDI's decline, I'm sure for Nigeria, the story had been that of very sluggish, if not at a snail speed, over the last year or so.
Yes, thank you for the question, boss. Yeah, okay. So for FDIs, what we saw was that there was a decline of about 49% globally, but it was majorly due to the fact that flows to Europe and US was in the negative territory. So they were the major dragons to flows to globally. There were major dragons for flows globally. If you look at the developing economies, actually, the decline was a lot more subtle. We saw a decline of about 16%, and Africa was hardest hit, definitely, with a decline of about 28%. And we could also see that, that prop up that we saw for some of the developing economies was due to the fact that, we saw more M&A transactions go on. There were no more mergers and acquisition. And, that was majorly attributable to the fact that, the coronavirus definitely would lead to, some sort of a reduction in the valuation for some of these companies. And, they felt like, it was the right time, to get able to get favorable pricing of some of these companies, and they later all their guns and things like that. So Africa still the laggard in this part of the world. 28% decline. We're seeing that some of there were spillover effects from the global economy. Definitely the coronavirus pandemic was a major dragon for them also. But we're also seeing that the level of development in African economies is still relatively low, and the penetration from those global economies was not favorable for them, especially because those guys were trying to build their cash buffers, and we're trying to spending was a lot more watched and things like that. So, we're only seeing all these flows to all these African economies, and being the way, the heightened level of risks that we're seeing in these economies. We're also seeing the fact that, regulatory risks are high. We're seeing the fact that, exchange rate vulnerabilities are also there. All of those factors put together, they weren't so encouraging for, foreign investors to come into the markets. So we saw that, FDIs was a laggard. But, one thing that we did see about the developing markets was that greenfield investments actually significantly declined. We saw that Africa declined about 66%. All in all, for developing economies, the decline was about 49%. And that is actually the major area we should actually be looking at, the greenfield investments. Foreign investors are not so propped up about bringing their funds to the African economies and things like that. So if you look at the Nigerian space also, you'd also see that growth slowed down sluggishly. I mean, you look at, okay, why would foreign investors want to bring in their funds into the Nigerian to developing economy? You'd see that all these advanced economies already have growth is already so stretched out for them. They can do a 2%, a 3% kind of growth, but it's in countries like economies like Nigeria, economies like Ghana, and economies like Kenya, you see be able to see extensive growth about 8%, 9% because of due to the level of underdevelopment in a lot of their sectors. So they have that potential. But the investment climate is not very favorable, and that hasn't also been on Nigeria's side for a long time. So we're also seeing that even our mainstay, which is oil and gas, it didn't even perform, like we expected it to do, majorly due to the coronavirus effect and things like that. So you're having that, our operating environment is not favorable for a lot of foreign investors. There's exchange rate vulnerabilities. All of these things are very, very unencouraging to foreign investors bringing in their funds to the Nigerian economy. We're seeing that even the oil and gas sector has been thriving for a while. If you take a look at the last auction that we had, for marginal oil fields, I mean, about 21 licenses were issued, but we're seeing that currently only 4 licenses are being utilized by these indigenous companies. I mean, so the rest of the 17 other companies are just on the sidelines, waiting to look at what's going to happen to the PIB and things like that. So we still need that level of restructuring, more or less, to a lot of our policies. If this PIB bill is going to be passed soon, I think we should be able to see more growth, more investments into sectors like the petroleum sector, into the electricity sector, which is still not, cost effective of tariffs.
Interesting. Thank you so much. Quite a very deep and wide thoughts on FDI and some of the things that we need to do to attract a foreign direct investment and stimulate industrial production locally. But I'm sure Luke is the one smiling now because the third quarter earnings are looking really good. Well, they're looking positive right now. The big banks haven't reported yet, except Stanbic IBTC. So, waiting on this, if you look at Flamuse, NASCON, some positive news. The M&A between CAP PLC and Portland Paints looks like one good news as well that the market could use, despite the protests, the whole macro political social environment that has been depressing for a couple of weeks, not to add the virus concerns, as it were.
Good morning, boss, and good morning, everyone. Thank you for having me today. So speaking on the earnings season, I mean, looking at what the banks did in the first half of the year, we saw better than expected performance from a number of these banks, especially from the tier one banks. At the onset of the pandemic, the expectation was that we'll be seeing significant provisions, loan loss provisions in their books. However, looking at what they reported in the first half, we noticed that we didn't really see that high level of provisions from these banks. We also saw resilient performance in terms of their interest income as well as their non-interest income, especially among these top tier banks. So going with what Stanbic released for the 9 months period, we noticed that the bank was able to report impressive, better than expected, and you would like to call that impressive performance. We saw interest income declining slightly. However, income from the non-interest income came in better than expected. So that really supported the bank's performance. And so a number of investors are now taking a cue from Stanbic's performance, believing that a number of these other banks will report impressive performance for the 9 months period. And that's why you're seeing bargain hunting activity among the banking stocks. Then for the consumer goods space, I mean, you saw what Flami reported for the half-year performance. We saw better than expected, significant growth in top line as well as bottom line. So two major factors are driving this growth. One is Flami's aggressive play in the food business. They started that last year and they are playing actively in that market now. We've seen that supports their revenue significantly. And let's not forget that last year, towards the end of last year, the federal government decided to close all land borders in a bid to tame smuggling activities into the country. So that has really supported Flami's operations. We've seen significant growth in their market share as a result of this. And we believe that this might continue for the next couple of quarters. Although we have the expectation that the land borders could be reopened next year, given the fact that the African Free Trade Continental Agreement is expected to take place next year. It was actually expected to take place by June, July this year, but because of the pandemic, a number of these African economies did not really concentrate on that agreement. So next year, we expect the African countries to revisit their agreements, and we see it coming into effect next year. So this level of significant growth we are seeing in Flami right now might reduce by this time next year. However, we do think that the company is on the path of sustainable growth going forward. Then looking at NASCON, I mean, same narrative basically. The land border closure is what is really supporting their top line during this period. So we do expect to see that coming into play in subsequent quarters. However, for the oil and gas sector, I mean, it's a mixed bag. So for the upstream companies, we see our oil prices at very low levels, although we've seen significant recoveries from what oil prices we are doing in the months of March and April. That was when we felt the impact of COVID-19 the most. We've seen significant recoveries from that period to what we are seeing currently in the oil market. However, compared to pre-COVID-19 levels, you could tell that oil prices are still at very low levels. Currently, Brent, for instance, is at about $40 per barrel. That's way less than $65 per barrel that it was pre-COVID-19 levels. So this will continue to impact oil revenue for the upstream companies.
Okay.
For the downstream companies, however, with the move by the government to fully deregulate the sale of PMS in the country, we think this will support the operations, not just in terms of revenue, but in terms of margins. And we understand that lean margins were the major challenge this oil market has had in the last few years. So seeing improvements in their margins, we expect a number of them to return to profitability. For instance, excuse me. So, for instance, looking at what Total did in the past 2 quarters, the company reported losses after tax. However, in Q3, we expect the company to return to profitability. Going by our projection at Vertiva Capital, we expect to see the company turning in profits for the 9-month period. So, we think it's a good one for the downstream companies. So
Okay.
overall, we expect positive sentiment in the equity market as a result of this.
We appreciate that so much. The earnings season is continuing even as we end the month this week into November next week. But again, for Southern Africa, let's go to Southern Africa, and of course, two stories are the biggest today. South Africa's budget announcement by Tito Mboweni is in the afternoon. Lunchtime is the big story, and of course, the Zambia, when it comes to that deal with the China Development Bank over its commercial loans. Ali, I want you to take these two stories for the Southern African space. Quite a bit, a few others, but let's just deal with those two. What are investors looking for in Mboweni's budget?
You know, Tito has got to thread a needle here with this budget. I mean, he's got to juggle so many different stakeholders. Multilateral institutions and the World Bank set some very tough conditions ahead of a $2 billion loan request, where they wanted him to cut back on the cost of recurrent expenditure and promise not to divert money into the state-owned enterprises, is signaling the challenge that he's got. He can't bail all his SOEs out. Firstly, he can't fulfill the wishes of the entire civil service. I mean, it's a piece of string, and you're at the end of that piece of string. So I'm very curious as to see what approach he's going to take. But I think he's going to have to talk straight to everybody, and they're going to have to tighten their belts to some degree. And I think that's really going to fall on the cost of government specifically, which is going to make his own party very unhappy. Tito, I would rate him as one of the top finance ministers on the continent, but my goodness, he's got a very, very tough brief here. I mean, you're in double digits on the budget deficit. You're going to clock way over 100% debt to GDP. By 2024, most people expect debt to GDP at 140%. This is frankly out of control now. And the question is, you can carry on, but at some point it unravels and unravels very fast. And cometh the hour, cometh Tito. He's got to deliver, and he's got to start showing people that he's going to take control of this. With respect to Zambia, I was running the numbers there. This is another extraordinary situation. 90% of Zambia's budget has to go towards debt repayment and debt redemptions. Only 10% is available now for the cost of government, the cost of any programs they've got. This is another situation which is just totally out of hand. And essentially the challenge here is you've got China on one side, you've got Eurobond stakeholders on the other, neither of whom are even in communication, let alone seeing eye to eye. And you've got a president who's deluded, who's going for an election, and he wants to throw money around. Otherwise, he doesn't think he'll win it. So you've got a classic scenario in Lusaka, and I'm just very confused as to how it's going to happen. You've got to be a brave man if you're buying Zambian assets right now. You're looking through this period. And then just to touch on this big election next door to us in Tanzania, it started yesterday. There were a lot of problems in Zanzibar. There was some deaths. And now you've got the election happening. The ex-head of intelligence was quoted saying, look, if it was a free and fair election, the opposition would win. But he said it's not going to be free and fair, and therefore the opposition won't win, which I think sums it up and the way it looks to me at the moment. So it's a very, very fragile situation that we're looking at. And whether it's even in Angola, we've got tremendous unrest on the streets. So, you know, we're watching, I think, things, whether it's in Lagos, whether it's in Luanda, whether it's in Tanzania, whether it's in Lusaka, we're watching a very, very fragile environment in sub-Saharan Africa. And my question is, does leadership get it? Does leadership know even how to deal with it? And that makes me even more concerned about the financial outlook for sub-Saharan Africa over the next 12 months.
Interesting scenario. Let me just ask Olua for just 1 minute, and just 1 minute only. When you look at South Africa's situation with the World Bank speaking about the size of the government, very weak state-owned enterprises, and the request for budget support that the World Bank is asking South Africa to hold on a second. We want to be sure that everything is well. Very huge recurrent expenditure. That speaks to Nigeria's scenario, isn't it?
Yes. I mean, that speaks to Nigeria's situation, recurrent expenditures, and we're also seeing that, you know, some of these structural deficiencies that we're seeing, you know, their power, especially their power sector, as we're seeing that, you know, some of the journeys, some of their cities like Johannesburg are moving into, you know, solar systems and things like that. So yes, so recurrent expenditure is still on a rise for a country like South Africa, still the same for a country like Nigeria also. But, you know, we also have to look at the fact that, you know, these economies have to start looking out to other transformative policies that will, you know, would improve growth in their economies. You know, same for Nigeria, same goes for South Africa, same goes for Ethiopia also.
Okay, let's touch on North Africa very quickly to wrap up the show this morning. When you look at British Petroleum starting gas production offshore Egyptian coast, the Arab Tunisian Bank reporting a jump in net income, trade deficit for Egypt 20.5% decline to about $3 billion in the month of August. And in terms of sustainable development report, Egypt has been ranked 83rd out of 166 countries. That looks like a very good ranking there, isn't it, Luke?
Yeah, it is. It is. I mean, from what we are seeing right now, Nigerian economy, looking at the stock markets in particular, I mean, it's been kind of mixed lately. Although recently we've started seeing like renewed interest in the stock market, so we do expect that we might just continue to see.
Okay, thank you, Luke. Ali, I was trying to get your sense out of the sustainable development projects and sustainable development goals. The ranking that Egypt just got, it is out of 166, globally speaking.
So that's, to me, that's a very high ranking and something that they should be proud of. And, you know, they of course did that green bond recently. So I think what you've got is an understanding of the metrics of sustainable development within the corpus of the government. And I think, you know, that ranking speaks to that. And also the oversubscription that we saw in that green bond also speaks to that. Of course, Egypt is also making a big push into gas production, clean energy, and therefore I think that's also been taken into account. So overall, I think they would be pretty happy to take away that ranking, given the situation that we're all in.
Okay, thank you so much, everyone. Let's leave it there for today. Tomorrow is yet another day on the Market Street Frontier Africa reports. Thank you so much, Ali Kansachu in Nairobi. We appreciate your time today. Do have a very beautiful day, and Orelua Odetunde from Greenwich Merchant Bank. Thank you so much. And of course, Luke Ofejebe from Vertiva Capital Management. Have a great day, everyone. Thank you so much. I am Bosun Amafai, and I'll see you next time. Bye for now.